Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, June 6th. We got a couple items here on the economic calendar we'll kind of go over today. Again, this is kind of a quiet week here. For the most part, markets will be kind of dictated by geopolitical items or maybe some corporate releases. But today is no different. We got productivity for the first quarter. So the last report that came out was at 0.7% increase. Forecast was supposed to be at zero point 0.6, and of course, it was disappointing. It came in at 0.4%. Now, the other item here for Q1 is the unit labor cost. Last report came out at 2.7 increase. Forecast was supposed to be 2.9, and it came in at 2.5. Excuse me, 2.9. So it came in at forecast here. Let's jump over to the headline news. The stock market was a little bit mixed, but now it's all in positive territory. Sorry about that. I meant to change that, but it started off mixed. Nasdaq was down. They were kind of taking. Nasdaq was kind of running up. It was doing. It's been up quite a bit, and they were kind of taking a little bit of a breather this morning, kind of watching trade, and then just fairly recently, it's kind of gotten into the green here. And a lot of this is taking place is trade. There's reports that Secretary of Treasury or Secretary was coming out. Mnuchin urged President Trump to exempt Canada from the metals tariffs. And then China apparently was kind of trying to give a olive branch by offering to buy $70 billion worth of U.S. goods to kind of offset, try to avoid this trade war. So these kind of ease concerns about U.S. trade and maybe even global growth for the year. So investors are kind of are looking at more optimistically these reports. So here's the bond market. Bond market is on its way down. As you see, we saw that trend. We were pushing on the 25-day moving average, even going down below it. We're currently about 20 basis points lower, which translates to a little bit higher interest rates today. As a result, now hopefully we can get above this 25-day moving average, use this as a floor of support and hold. Otherwise, we've got about another 40 basis points to our next floor of support here. And obviously, we wouldn't like that because that means rates will go up that much further, about another quarter point rate here. On the other hand, we got 10-year Treasury also putting pressure on its 25-day moving average, and right now it's at 2.97% right here. So again, if this ceiling can hold and keep the Treasuries lower, that might give us a little bit of hope here on the mortgage-backed securities, where maybe we can get above this 25-day moving average and hopefully get the gains back here. All right, so next week will be obviously the bigger one. We'll have the FOMC meeting going on with a little bit more data coming out, but for the most part, this week's going to be pretty quiet. Again, rates to conclude, rates are up a little bit because mortgage-backed securities are down about 20 basis points. If you guys want to get updates on any changes in the markets as they do occur, come over to Twitter. You can follow me at Mike Bjork. Otherwise, thanks so much for watching. I hope you guys have a great rest of your day. We'll look forward to see you guys tomorrow, and hopefully I'll see you on Twitter as well. Bye-bye.